Instacart wants you to think that you're making doctor money. They flash these massive hourly rates on your screen, but after I tracked every mile, minute, and penny of my shifts last week, the math is telling a completely different story. Welcome back to the Gig POV. I spent 5 days out in the trenches, logging everything. Active time, offline time, gas prices, wear and tear on the car, and what I found is going to change how you think and look at the app forever. Here is the raw data from my Monday through Friday grind. You can see the totals, but the raw numbers don't lie. We need to break this down. Let's look at the first massive lie of the gig work, the hourly rate. Just look at this chart. The green bars are what Instacart claims I make. Look at Tuesday. Over $40 of an active time. If I told you I was making $40 an hour delivering groceries, you'd quit your job tomorrow. But look at the red bar right next to it. That red bar is the reality. After you factor in my gas, which was $3.16 a gallon, wear and tear, which is 12 cents a mile, and all the time I spent completely offline waiting for an order, that $40 an hour, it completely crashes down to barely $16 an hour. And the answer is the most frustrating part of this job, which is time. The question is, where did all that money go? Who is actually making money? Shopping, driving, delivering. The orange is me sitting in a parking lot completely losing my mind, or watching a movie, or scrolling, or doing some random stuff that I probably shouldn't be doing. Look at Monday and Wednesday. I spent 4 solid hours each of those days just waiting to work. And this right here is what I call the silent killer. The red chart puts a literal dollar amount on that waiting time. On Tuesday, my downtime penalty was over $23 an hour. That money is bleeding out of my pocket while I'm doing absolutely nothing. Instacart, it doesn't pay you to wait. And when your market is saturated with drivers, your hourly rate gets slashed in half because the algorithm decided to starve you. It's brutal. So if waiting kills our pay, what's the strategy? Do we just take everything? No, because then you fall victim to what I call the batch lottery. Look at Wednesday versus Tuesday. On Wednesday, I took 7 orders that averaged almost $30 a pop. It was a $200 day. On Tuesday, I took 6 orders, almost the exact same amount of work, but they averaged me $12. What total trash. The effort was exactly the same. I was still pushing the cart, dealing with out-of-stock items, bagging groceries, climbing apartment staircases. The difference between making $76 and $200 wasn't how hard I hustled. It was just pure luck. Waiting for the whales is the only way to survive, but it tests your patience. But there's a dark side to those high-paying days, and this final chart, it proves it. I wanted to know if I could make high pay without destroying my car. Look at these 2 lines. The purple is my total pay, and the blue is the miles driven. They follow each other almost perfectly. To make $200 on Monday and Wednesday, I had to put over 50 miles on my car each day. Thursday, when I tried to keep my miles low, my pay tanked to $45. There is no cheat code. If you want the money, you have to trade in your vehicle's lifespan for it. So, is Instacart still worth it? If you look at the $40 active hour, absolutely. If you look at the $16 net, well, that's debatable. You have to know your market. You have to track your miles. And you have to have the mental toughness to sit in that parking lot for 3 hours a day without losing your mind. I want to hear from you guys. What is your actual net pay in your market after you factor in downtime and gas? Drop it in the comments below, and let's compare notes. Hit that like button if you appreciate the transparency. Subscribe for real data drops from the gig POV, and I'll see you in the next batch.